So what I'm going to show here today is when I'm tracking longer term instruments, for potential trade setups, I look for, and like this Canadian dollar, which has had a very extended multi-month rally, I look for markets. I personally, for longer term trading, I like to play markets at the edges of an extended range of price when the market's had some real good trending movements, or maybe the market gets into a multi-month range market, and as the market's trading back and forth between those edges of the range, then I evaluate what are the larger participants doing with their traded order flow, and are they accumulating at one edge of the range or the other. And I very frequently find just brilliant trade setups by copying or joining trade as I see the larger participants start to build or accumulate inventory in various instruments. And I do that intraday, but I really like taking trade setups, seeing very large supply and demand based setups for longer term trades. So recently in the Canadian dollar's had a pretty decent rally, had a pullback. We have a rally, a multi-day rally right here. And there's basically a flip in the supply and demand picture that got my attention because I've been sitting here patiently waiting to be a seller of the Canadian dollar. Well, I finally got that flip in the order flow that I was looking for, and during this entire rally, we started to get some accumulation of sellers into this rally. Now, the first part of the rally, in my opinion, a predominance of the selling I'm seeing the market-driven order flow as I'm tracking the cumulative delta parsed volume study, is any buyers that came into the market off the lows, they're starting to cover out into an uprising market. But at this point, on this particular day, right here as we started the month of March, here in March of 2010, I had a very substantial long covering where somebody's really booking out a lot of profits and locking in profits from a nice rally move. Also, it very well may be in combination with those that had been buying this market before, also maybe taking profits from even lower pricing levels than even just buyers that were buyers of this run. So anyhow, we started to have some very substantial market-driven order flow this day, and it did come out and take out a previous delta threshold, so I get a little bit of flip in the supply and demand picture as the market's rallying. So from this point on, I told myself all trade kind of above the opening price of this day, this area of price would be game for me to start selling into this particular instrument. Now, I actually trade the 6C instrument when I trade, but right here I'm tracking the CDH0. At this point now, as this market's been slowly, you can see we had a very linear price movement. Now the market's gone into more of a, buying, selling, buying, selling, buying, selling, and that's another thing I like to see in the order flow. But now I'm starting to see evidence that there is short accumulation, and that's where I want to be, a seller starting to build a longer term position. So really, once the market started trading back above this level, I was now willing to start starting to work a trade management style of system. I typically call it the accordion. Now, I wasn't running my automated accordion short system in this area of price, but I did start selling positions as the market would get rallies to new highs. I would scale positions in. On pullbacks, I would basically cover some positions. So the entire time the market is cycling or rotating in price, every time I'm getting a new high on a smaller time frame chart and then getting some sell response, I'm a seller off each new high, and on pullbacks I'm scaling out not only lower held positions but portions of the upper positions profitably. So I'm constantly cycling profits, working light amounts of inventory. Now, there was a known news release that was going to be coming out here on Friday, Thursday night going into Friday, that I that I knew I had to be aware of. So obviously anybody that's trading currency products needs to be in tune with news events that could possibly affect that currency or or a group of currencies if there's major like news events. But anyhow, knowing that, I continued to work this market. I got my signal to be able to start the market or start the trade, a longer term trade. Market traded back above the opening price kind of the day that I got the trigger, and now I'm starting to actively participate and add liquidity to this market and pull it out, cycling positions, starting to book profits as I'm continuing to cycle positions within this range of price. Now that opening kind of price area was also a key level of price, and I'll just call it the 96.80 level, thereabouts, close enough, that if the market broke through that area, then I know I need to be hanging on to runners and start looking for potential extended moves or maybe a cycle of this instrument back to the opposite end of its near-term kind of channeling range. We did get a very nice pullback, made some very nice profits, and I think we're just 2 or 3 ticks away, or pips, whatever you want to call it, from the 96.80. I thought we traded 96.83s, and of course right away we bounced. And right as we started to bounce, I can see many of those that had been accumulating short inventory. Some of them started to cover uglier, probably lower held positions into the market pulling back after they were given the opportunity of a much higher high than previously offered, maybe while selling positions in this area. And that's what commercial participants do also. They cycle positions into the market, cover them, cycle positions in, cover them. Commercials will rarely ever put on one static entry, put a stop, a target, cross their arms, and wait and let the trade play out. Heck no. Commercials actively cycle in liquidity as the market pulls back, cycle some of it out, market trades higher, cycle in more liquidity, market pulls back, cycle out, cycle out. And I've decided in all of my trading, intraday and longer term, that I wanted to trade like the larger participants. Now obviously you have to have decent account size to do that and have to have a very very detailed trading plan. So I'm working this area literally in the same fashion that I see larger participants. I mean, I've been trading that way literally now since 2003, as I've been using the cumulative delta now for over 7 years as my main means to track markets by paying attention to the market-driven order flow and predominance of commercials' participation in the market as they cycle in and cycle out positions is through market orders. So now that the market has pulled back, came to my area, I was cycling out positions, and we can see there started to be some of those that were covering out substantial portions of short inventory, and most likely they were washing out lower held positions at break even or slightly better to scrub out that lower held inventory. And it makes sense, there was no news coming up, and then they retain the upper held inventory and see what happens through the news event. So basically of the short inventory that had been accumulating from literally this day going forward, we had almost 50%, maybe about 40-45% of that inventory unwind at break even or better for the most part. So any of the inventory they initially worked into the market, they for the most part were able to unwind that inventory. They had the opportunity to unwind that inventory and book some profits for taking the shot at lower pricing levels, while then retaining upper held short inventory that they've been working into the market since the initial period of this short accumulation taking place.